Hello everyone, this is Beyond and welcome to another edition of the Forex Market Update. And what a week we had last week. In front of you is a chart of the US dollar versus the Swiss franc. And for those of you who don't know what happened was that the Swiss National Bank back in 2011 had announced a peg to the euro of about €1 20 cents. Let me just bring up the euro versus the Swiss franc. The chart of the euro versus the Swiss franc, and back in 20, let me just go back to 2011. Back in 2011, the Swiss National Bank announced that there will be a peg with the euro versus the franc, and what we saw was a dramatic rise in the value of the euro versus the franc, and this happened in about September of 2011. Because before, what was happening was that the franc was increasing versus the euro from a high over 170 all the way down to almost parity. And the Swiss National Bank was concerned about this, and they announced the peg to the euro in September. So since then, what happened was that the market went very quiet. And as you can see by these very narrow bars, the market was at about 120 for it went up between 120 and 124, very narrow range in this market. And this happened over a period of between 2011 and 2015. And then what happened on the 15th of January was that we saw a massive increase in the value of the franc. And why did that happen? Because the Swiss National Bank decided that they were going to end the peg, and we saw over a 20% increase in the value of the franc versus the euro in one day. Now, folks, this is something you only see once a decade or once every. It does not happen often, especially with a major currency to appreciate by 20% in just one day. And what that did was, I'm sure a lot of traders made money, but if you are trading without a stop loss and you're trading with a trade size too big, I know just based on reports and what I've gathered is that there are a lot of folks who lost a lot of money last week in the Forex market because of this move. Now, fortunately for our members, we were actually short the Australian dollar Swiss franc before the announcement. And the reason that we were short was that the market was in a downtrend. The market was in a downtrend and looked to me like it was consolidating. This is before the announcement. So we were actually short the market before the announcement, and our members were able to make a pretty good profit from this move down in the Australian dollar versus the Swiss franc. Okay, so that was the big news that happened last week. Now, what are we looking for this week? Okay, for this week, all eyes would be on the Swiss franc again, because we may see the market get more volatile and you may have other movements. So I'll be watching the Swiss franc very carefully this week to see how the market reacts to that decision. I mean, normally after such a huge move, you may get some retracement before going back down. But Things are a bit uncertain, so we just have to wait and see what is happening. In light of the decision, we saw gold really appreciated from about the 1220 level here up to the 1277 level. I guess traders were a bit uncertain, and they flew into gold for the uncertainty that was happening. So some money moved into the gold market as a result of that. Last week I said that in gold we had a consolidation. We had a triangular consolidation pattern, and the market broke to the upside on this consolidation pattern. But I would not get bullish with this market just yet, because we still have a series of lower highs and lower lows. Lower highs and lower lows, and until that pattern of lower highs and lower lows are broken, we are still in a downtrending environment in the gold market. Critical support in gold is down at the 1150 area, and resistance starts at the 1350 level. Expect some resistance at this 1280 level also, because we're coming up on an important Fibonacci retracement level. The actual point is about 1293, so you can expect some resistance at this point from 1275 up to the 1294 level. Okay, taking a look at the Japanese yen. The Japanese yen was uncharacteristically quiet yesterday or last week as a result of the news. The yen really didn't move much. Another big loser was the euro. I mean, the euro went from 118 almost down to 114 last week. So the euro continued its losing streak, and really the euro has lost quite a bit of its value ever since June of last year, where the market was at 140, and now we are trading at 115.67. Okay, that is it for this edition of the Forex Market Update. Remember, you can make money in as a result of this volatility. You just have to ensure that your stop losses are in place. Your risk management is key, and one of the things that separates winning traders from traders who don't make money is risk management. Because if you, for example, last week, if you're risking too heavy, or your trade side was too big, you could have wiped out your entire trading account. And I know that folks did that, and you will be out of business. Remember, in trading, your capital is your business. So if you have no capital, you can't trade. And so it's just very, very important that you stick to proper risk management protocols. It is the key. Okay, thank you very much for listening to the update. If you have any questions, you can send us an email at info@acestrading.com, and I hope you have a good trading week. And if there's anything pressing, I will make another update this week. Thank you very much for listening.